The 2024 US presidential election has sent ripples of uncertainty across the globe, and India, with its burgeoning economy, is no exception. The Indian stock market, a barometer of the nation's economic health, finds itself at a crossroads as Donald Trump's victory reverberates across the world. Investors and analysts alike are carefully dissecting the potential ramifications of a Trump presidency on the Indian economy, particularly its vibrant stock market. The outcome of the US election carries immense weight for Indian markets due to the intricate web of trade, investment, and geopolitical ties between the two nations. The policies enacted by the new US administration, particularly in areas such as trade, outsourcing, and foreign policy, are likely to have a cascading effect on various sectors of the Indian economy. The Indian stock market, known for its sensitivity to global cues, is expected to react swiftly and decisively to the policy pronouncements and actions of the Trump administration. As investors grapple with the uncertainties and opportunities presented by a Trump presidency, understanding the potential impact on different sectors of the Indian economy becomes paramount. In the following sections, we delve deeper into the potential implications of a Trump victory on the Indian stock market, examining the short-term and long-term effects, sector-specific impacts, expert opinions, and investment strategies to navigate this period of transition and uncertainty. The immediate aftermath of Donald Trump's victory is likely to trigger a wave of volatility in the Indian stock market. Investors, both domestic and foreign, may react to the perceived uncertainties associated with a Trump presidency by adjusting their portfolios, leading to short-term fluctuations in stock prices. However, it is crucial to recognize that initial market reactions are often driven by sentiment rather than a comprehensive analysis of the long-term implications. In the short term, certain sectors of the Indian economy may experience a surge in stock prices, while others may witness a decline. The sectors that are expected to benefit from a Trump presidency include infrastructure, defense, and manufacturing. Trump's emphasis on protectionist policies and his commitment to reviving American manufacturing could create opportunities for Indian companies operating in these sectors. Conversely, sectors such as information technology and pharmaceuticals, which heavily rely on exports to the US market, may face headwinds in the short term. Trump's rhetoric on curbing outsourcing and his focus on bringing back jobs to the US could potentially impact the profitability and growth prospects of Indian companies in these sectors. It is important to note that the short-term impact of a Trump presidency on the Indian stock market is likely to be transient and subject to a multitude of factors, including global economic conditions, policy announcements, and investor sentiment. As the dust settles and the contours of Trump's economic policies become clearer, the Indian stock market is expected to stabilize and adjust to the new reality. The Indian economy, characterized by its diversity and dynamism, is home to a wide array of sectors, each with its own set of opportunities and challenges in the face of a Trump presidency. While some sectors may experience tailwinds, others may face headwinds, leading to a mixed bag of winners and losers in the Indian stock market. The auto ancillaries sector, a key pillar of the Indian manufacturing industry, is likely to benefit from Trump's protectionist policies. As Trump seeks to revive American manufacturing and reduce dependence on imports, Indian auto component manufacturers could witness increased demand from US-based automakers. The solar energy sector, a sunrise industry in India, may face challenges under a Trump administration. Trump's skepticism towards renewable energy and his support for traditional fossil fuels could potentially dampen investment sentiment and slow down the growth trajectory of the Indian solar industry. The chemicals sector, a significant contributor to India's industrial output, is expected to experience mixed fortunes. While some segments of the industry may benefit from Trump's infrastructure spending plans, others may face headwinds from his protectionist trade policies. The Indian IT industry, a global powerhouse, is likely to face significant headwinds under a Trump presidency. Trump's stance on H-1B visas, a key source of skilled labor for the Indian IT industry, and his focus on bringing back jobs to the US could potentially disrupt the business models of Indian IT companies. The Indian pharmaceutical industry, a global leader in generic drug manufacturing, is another sector that may face challenges under a Trump administration. Trump's emphasis on reducing drug prices and his scrutiny of foreign competition could potentially impact the profitability and growth prospects of Indian pharmaceutical companies. The potential impact of a Trump presidency on the Indian stock market has been a subject of intense debate among economists, market analysts, and industry experts. While opinions vary, there is a general consensus that the Indian stock market is likely to experience a period of volatility and uncertainty in the short term, followed by a gradual adjustment to the new reality. Some experts believe that the Indian stock market is well positioned to weather the storm and emerge stronger in the long run. They argue that India's strong economic fundamentals, its growing middle class, and its favorable demographics provide a solid foundation for sustained growth. Others, however, are more cautious, pointing to the potential risks posed by Trump's protectionist policies, his unpredictable foreign policy stance, and his focus on America First policies. They argue that these factors could potentially dampen investor sentiment, stifle global trade, and slow down India's economic growth. Despite the divergent views, there is a shared belief that the Indian stock market is resilient and has weathered numerous storms in the past. The long-term trajectory of the market will ultimately depend on a multitude of factors, including the pace of economic reforms, the implementation of Trump's policies, and global economic conditions. In today's global economy, protectionism can create significant challenges. As countries impose tariffs and trade barriers, businesses and investors must adapt to the changing landscape. Understanding these dynamics is crucial for making informed decisions in the market. The election of Donald Trump as President of the United States sent ripples through the global economy. His policies, ranging from tax cuts to deregulation, have had far-reaching impacts. Markets responded with a mix of enthusiasm and caution, reflecting the uncertainty and opportunities that lay ahead. The post-election period has been characterized by a unique blend of optimism and anxiety. On one hand, there is hope for economic growth and job creation. On the other, concerns about geopolitical tensions and trade wars loom large. Investors are navigating this complex environment with a keen eye on both risks and rewards. So, how should investors approach this new era? Diversification remains key, along with a focus on sectors likely to benefit from Trump's policies, such as infrastructure and defense. Staying informed and being adaptable will be essential for capitalizing on opportunities while mitigating risks.